Hello and welcome back to the Wendell Effect. My name is Brandon Wendell, Charter Market Technician, and I'm going to go ahead and dive into reading price action in the right way. There's several things I've learned over my career. I've been trading for about 25 years now. It's been, wow, can't believe it's been that long. But yeah, I picked up a couple of little tips and hints that'll help you, hopefully, in being able to identify what's going on in price a little bit better than you had before. So let me go ahead and shrink me out of the way, and we'll get this thing started. Again, welcome back to the Wendell Effect. And before we get started, just need to remind everybody that I am not a broker-dealer and investment advisor. We're going to take a look at all this education or information from an educational standpoint only. I'm not telling anybody to buy, sell, or hold any particular securities, or telling you that there's no promises. Basically, there's always risk involved in the markets. Keep that in mind. Don't try to put any money at risk that you can't afford to lose. Basically, don't trade with what you can't afford. Past performance is not indicative of future results. And there's, when you trade with leverage, you can also possibly lose more than what you've put at risk or what you've invested. And we are not subject to trading restrictions, so I could have a position in a security or initiate one at any time, just to let you know. Well, that being said, I'm going to go ahead and move me down here, and we're going to get out of that slide and start to talk a little bit about how to read price better. I mean, if you can read price action, you're well ahead of pretty much everybody else. A lot of people try to rely on technical indicators. I mean, yeah, they can be helpful, but really the decision on where to buy and where to sell should always be made on price itself. That's the main thing. So let's focus on what's really important. And really, when it comes down to reading price, I'm going to bring up a document here to make it a little bit easier to take some notes. Oops, I didn't pre-prepare because I figured it's better to just kind of do everything off the cuff, if you will. It works a little bit better for you and for me. So there we go. That's what I wanted. Also leaves better bloopers, right? Anyway, so reading price. And again, that's really what we want to do, is be able to read price properly, because the key to where price is going to go is on price itself. So when it comes to reading price, as I said, there's 4 key things you need to understand. Number 1, color. Number 2, shape. Number 3 is size. Sorry, size matters. Anyway, at least in candles. And the last one is location. And location is supply and demand. Now, when it comes to that supply and demand, I've done another video that's a really detailed piece on that. I'm not going to redo that. I'm going to go ahead and refer you to that video. So if you do a search on YouTube for the Wendell Effect Chart School, you'll come up with a couple videos here. One I have, Understanding Order Flow, which is kind of the basis behind what goes on for the supply and demand. And then right here I have the video called Chart School Supply and Demand. So that is the one I'm referring to right now, where it talks about exactly how to find supply and demand zones. So I'll go ahead and copy this down for you real quick and bring it back over. Paste it there, and that is the link if you need to. Or again, you can just simply search for Chart School, the Wendell Effect Chart School Supply and Demand. You'll find it there as well. So that being said, let's start off with color. We'll take a look at the other 3 in this video. Really what it comes down to is the candles pretty much tell you the truth about what has happened in price. So everything we need to know, as I keep saying, is in price itself. So if I go back to my charts here, green candles are green for one simple reason. Prices closed higher than they opened. That's it. It could have been 1 tick or 1 pip or 1 penny higher, but green candles show a higher close. And basically, because of that higher close, the buyers are in control. And we call that bullish. We got the bull behind me, and also the bear that I painted as well. That's a painting that I did in the past. So anyway. Yeah, getting back to this, the buyers are in control when we have the green candles. So we see that usually when green candles are in charge, prices are moving upwards. And the red candles, the only difference between green and red is where the close happens to be. So with the red candles, they show a lower close. And basically when I say higher or lower, it shows a higher close than the open. That's really what it is. It's the difference between the open and close. And that shows a lower close than the open. and the sellers are in control when you have red candles. So, I mean, it's pretty simple when you think about it, right? You only have those two colors. By the way, if you're colorblind, obviously you can change the colors on your chart. Just be aware of what you're changing them to. A bullish candle or buying candle is the one that's moving up. We closed higher than you opened, so you have green. With the red, we closed lower than we opened, so we have the red there. And the sellers are in control. So really what it comes down to with the green versus red candles, take a look to see the dominance of candles. If you see a color dominating one or the other, that is going to be your trend. And really, if there's a domination of one color or the other, that means the trend is relatively strong. So that's it. I mean, keep it simple. Like I said, it works. So I happen to be looking at the NASDAQ futures on a daily chart, and you'll see both red and green, red and green, red and green. But you notice overall, we're getting mostly green. The green candles on average seem to be a little bigger than the red. Therefore, we're in an uptrend. Again, keep it simple. So how do I know when I'm changing trend? Well, often the colors will start to get mixed. So actually, let's do it this way for the notes. There you go. Dominant color is the trend. And number two, if you get mixed color, that is equaling trend weakness. Okay, so again, I'll go back to my chart here, and as I move forward, well, let's see, we've got two green, three red, and notice before that, actually, might as well point that out in the uptrend. 1, 2, 3, 4 green, 1, 2, 3 red, 1, 2, 3, 4, 5 green, 1, 2, 3 red, 1, 2, 3, 4, 5 green, 3 red, 3, 2, 2, 3. Okay, so right here was the first little impulse up where we saw less green candles than we had red on the correction. Now, this isn't always going to work this way, but in this case it happened to. You can see 1, 2, 3 green after that and 4 red again. So twice we had that happen where the correction had more candles, and in this case it actually went further down than we had gone up. So that was a clue right there that prices were getting ready to turn direction. You know, we had before, oops, sorry, didn't mean to do that. Again, more candles up, less candles down, more candles up, less candles down, more candles up, less candles down. Again, it doesn't always work that way, but this is one way of identifying weakness. And next thing you know, prices are trying to move to the downside. We just had barely 2 candles green. Now we're probably impulsing down. So if we take this back to another time, well, actually, let's take a look at the bearish trend here. Kind of apply the same tactics, right? You see right there, red 3 after 4 green. Then you only get 1 green, and now you got 5 red. Okay, so we got 3 green, another 4 red. 1, 2, and then a red. 1, 2, 3, 1, 2, 3. So it's kind of even now with green and red. So right there, as we're moving down, we're noticing, okay, first we have lots of red, not as many green before it. More red than green. And now it's kind of changing a little bit. Here we actually had 2 green, only 1 red, 3 green, 3 red. So the red is still in charge because they're larger, we're moving further in direction. But that's a warning sign right there that the trend may be getting weak. Okay, the number of the color, the red versus the green, is changing. It's becoming more even, isn't it? So again, little subtle signs. Right there we have 1 green, 2 red. So still back to the downward movement where we have more red than green. Green, red, green. It's starting to alternate now. So we're getting mixed colors. Oh, there's a little more red coming back in. So the domination might be coming back. So if we count this the whole thing as an uptrend, we got 2 green and 3 red. We still have more red. Now we're just getting alternating colors there. Red and green mix. Again, that's trend weakness. And if you take a step back and just kind of look at this, you see 1, 2, 3, 4, 5, 6 red, 1, 2, 3, 4 green, and overall prices are moving pretty much sideways. You know, you obviously just got to look at the overall shape, and you can see we're not really going anywhere, are we? So we got Christmas, red and green mix right there. Not that the holiday has anything to do with it. But let's see, as we go forward, there's another green, green, red. Now we see the domination has changed, hasn't it? You know, we had 3 red there, but that was the last time we had the domination of red. Now we got green, red alternating, green, green, green. Let's see if we get 3 red. Nope, only got 2. Why? The trend's changing. So this would be applicable to our trend time frame. That's usually where I'm going to be focusing on the color as well, is on the trend time frame. Remember, I usually look at 3 different time frames, and I'll save that for another video. As a matter of fact, I'm going to write myself a note so that way I can make that video for you guys. Okay, there we go. That'll be the next one in the series. But I always look at multiple time frames when I'm trading, so whatever I'm trading on, I look at a bigger time frame to give me the trend. And you can see that the trend is changing there, and sure enough, it moved up a little bit. We went sideways, then we got the domination of red. So it may not be the best indication. By the way, I want to make sure you understand when we're looking at this, it's going to be all of this together, color and or shape and or size and or location. So you can't just take one in a vacuum and try to use that as your indication as to what's going to happen. You got to kind of use everything together. Okay? So that's one thing. And actually, we can take a look at a couple other securities. Let me see if I go to, say, Euro, Japanese yen. And let's see, I'll go to a 240-minute chart. Really doesn't matter. So this is a couple weeks ago in August. And again, same thing. You see the domination of red. There you get 1 green, red, red, green, green, green. That was the downtrend ending right there where you see the domination kind of shifted and the green candles got bigger. Now we got 4. Okay, we haven't had 4 green together anywhere along there when we're moving down. So downward trend's over. Domination of green. Let's see if we can figure out where it's ending. Well, we had 2 red, 2 red, 3 red. Now we're starting to see more weakness. There's more red creeping in again. And we may be shifting trends. We'll see. It's actually somewhat even right now, isn't it? Between the green and the red at this point. So we don't really have much of a trend. And again, prices are kind of contained, moving a bit sideways here. Now we're getting more green coming in. So that's a hint that we're likely to break to the upside. We haven't done it yet, really. Again, we're making these same highs, but notice there's a lot more green than there has been red. Nope, the red decided to want to take over right away. So it's kind of back and forth, and there it is, dropping again, downward trend. Now we got more green together. We haven't had that in a little while after the downward trend. So I'd be cautious with this downward trend, thinking it might be coming closer to an end. And sure enough, there's the green coming in. And we're starting to make moves upward. And like I was saying, when it comes to location, you see where this turned is typically going to be at some sort of a zone. Back here, you had drop, base, rally. So that's why the color shifted right there. You started getting some green, and there we definitely got a lot more green because we're hitting a demand zone and getting ready to change trend. So that's what I was saying about you can't just use one thing. It's a combination. So if you start seeing the changes, like I said, right here, we've been playing a bit of a downtrend, but there's a lot of green going on, and we bounce off a demand. Now you got to rethink your position and probably start looking for some longs in a bullish trend. And sure enough, that's where it moved up. So that's one thing, color. Now shape is also pretty important. And really what we're looking at here is going to be the closing price versus the high and the low. Okay? Closing price versus the high and the low is what we really refer to when it comes to shape. So let's take a look. Actually, I'm going to go over to my paint here and draw a little bit. Okay, so here we are on the drawing, and what I'm going to do is just bring in a candle, and it doesn't really matter the color of the candle, but we need to know where the opens and closes are, so I will actually use a color for this one. So let's say I'm going to use or draw. Here we are, and we'll do fill, solid color, a green candle. And there's our green candle. So that closed at the high. But basically, that's not really what I'm concerned about. Well, I am to a certain extent, but what I'm going to be looking at here is the area between the open and close, high and low. Oh, I'm sorry, I didn't close at the high. I did now. Didn't close at the high at this point now. So, clean this up. There we go. Anyway, when it comes to the price areas, or price on the candle, we have open at the bottom of the body, simple candle stuff, right? Got the close at the top of the body, we got the high at the top there, the wick, and we've got the low at the bottom wick. Pretty simple. So, like I said, what we're really going to be concerned with is any of the price action between the high and low close or the low and the close. Anything that goes on between the high and close, actually we'll do this thick. So any price action between this high and that close was caused by selling pressure pushing down. So these are all sellers. Anything you have between price action as my dogs get a little aggro behind me there. Anyway, so price action, anything between the high and the close is selling pressure, period. Because the buyers weren't in charge there, the sellers were, and they drove prices to close at a lower value. And that'll be the same no matter what the color of the candle is. Really doesn't make a difference. So if we go back to a green candle, again, that looks a little different than this one. Perhaps I do a green candle that looks like this. Even though that's a green candle, that has a lot of selling pressure. That's more or less a bearish candle. And the reason why is, of course, the price action that occurs between that high and that close, that's all selling pressure. And when you look at the buying pressure, which is the price action between the low and the close, in this candle, there's barely any. So we see that the sellers were dominant during this candle, period. Right? So let me go back here and bring this up. Any price action there we go. Any price action between the low and the close is buying pressure. Period. So we can look at a red candle now. Let's do that. Again, it doesn't really matter the hold on a second. Yeah, shape. Good. Yeah, the color doesn't matter as much in this case. Because, again, we could have a red candle looking like this, or we could have red candles that look like this. And I'll draw them out differently. With this red candle, there we have that. And with this red candle, we might have something like this. You might recognize that as a hammer candle. Okay? And you really don't need to know the names of the candles, to be honest with you. It's not as important as, again, understanding the buying pressure and selling pressure. So in this particular case, we have the selling pressure between the high and the close. And here, again, very little selling pressure in comparison to the buying pressure. So that bottom candle, even though it's red, it's a very bullish candle when you see it, because the buyers kept us off from closing at the low. So again, there's our close. Oops, forgot to change color. That's okay. Did that go? No, not yet. There it goes. High and low. There we are. And might as well throw in the open just in case you forget that a red candle opens at the top of the body. So again, you've got selling pressure there, very little selling pressure on this one. So red doesn't always necessarily mean selling pressure. You got to take into account what is the candle actually telling you. And now when you start looking at different candles, you'll actually see some warning signs from time to time. Okay? So not always perfect, but it can help. I mean, even looking at this particular chart, if we just go to a random point, doesn't matter where. Okay? There we are, random spot. You can see that at the top of the market, we had that big topping tail on that red candle. That was a lot of selling pressure coming in. Here we see, okay, we got selling pressure, Now we got buying pressure and we paused. Selling pressure took over again because we closed near the low. Even with these green candles, like if you see something like this, you might be thinking, oh, well, we got interruption, we've got green. Well, wait a minute, take a look at those green candles, and they're topping tails. That's actually selling pressure there. This is just a pause in movement. We're likely to continue to move to the downside. And sure enough, they're moved down. Well, still moving a bit down. Now we're getting buying pressure. Pretty extreme, too. You can see we closed well off those lows. Okay, and started to confirm it by moving back up. So you might have said, okay, well, that's a hammer candle confirmed when you have the movement above the high of the hammer. Well, the very simplest of this, you just see there's lots of buying pressure as we move down. If this is happening at a demand zone, then you're likely to have a bounce. And, well, we have drop, base, 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 rally. It was a little bit before the demand, but it worked. Okay. And sure enough, we start moving up. Now as we're moving up, I get a little bit of selling pressure, but not much. That might only give you a pause. Indecision. Okay, a little more selling pressure, though, than buying, because, again, you got the bottom wick that's a little bit smaller than top wick there. And prices move down just a bit. Now we have buying pressure again, and we're moving up. That just, sometimes comes out of nowhere, although not necessarily when you see the selling pressure picked up back here. Again, just kind of interpreting what is every candle telling me. And this is very important for bigger time frames, not necessarily lower time frames, although on the lower time frame it can tell you whether or not you might want to take action at a zone as well. This is indecision on this candle. You have almost the exact same buying pressure as you have selling pressure. So even though we had lots of selling here, we failed to close at a new low, and we had a little bit of buying pressure creeping in here. So that's a warning sign we may be done with our movement downwards. Not quite yet, apparently. Still picked up again. And we're now getting another buying pressure candle again. Not very powerful, though, to be honest with you. And still moving down. Now we're getting more selling coming in. This is telling us we're likely to continue to move down. I mean, you can almost guess what comes next. When you see that much selling pressure, you had almost no buying pressure here, right? Very little wick. Getting a little bit more buying pressure coming in, but the selling pressure is still in charge. That tells me that we may be nearing the end, but we're not at the end of the downtrend yet. And there you go. Notice the bottom wick is even growing more, isn't it? Had very little bottom wick, more bottom wick, more bottom wick. We're getting closer to the bottom. And we may be putting in a bottom pretty soon. Again, you might obviously want to look back and see if this is actually at a demand zone. That's where the turns usually will occur. Oh, we are at demand right now, as a matter of fact. So notice, and by the way, I kind of went over that quick. That's the demand zone I was referring to. Drop, base with a big buying pressure candle, and then the rally, right? So let's go back to where we were. There it is. Whoops. And remember what I was saying about the candles. The bottom tails are growing. That's showing us buying pressure is gaining. And that's usually indicative of a turn in price. If we start seeing topping tails getting bigger, we would expect prices to start moving to the downside. Same thing. So, is it really a surprise? We got a green candle. We're at a demand zone, and we had more buying pressure coming in on the candles. And sure enough, there we go to the upside. Now, as we move up, we're having trouble because you can see we can't get we're getting big topping tails. We can't get a lot of, there's a bit of buying pressure, but there's a lot of selling pressure with it, so we're still hanging out in this area. And now the selling pressure's picked up. We're trying to push through that demand again. We really don't have much buying pressure here. You might be able to get through this time. Okay, more indecision, but overall, more selling pressure than there is buying pressure. We're trying to get through. Still can't do it yet, though. Indecision again. Still not sure which way it wants to go. Bunch of indecision, but we're losing our selling pressure, so it's waiting and trying to push up. There it goes. Still a little bit of buying pressure here. Even though we pulled back, we had a big move and kind of a correction back, But there's still a lot of buying pressure, and that's telling us that we're more than likely to move either a bit sideways or slightly upwards. Sideways. But still, again, the buying pressure's there. Oh, gave it up. Again, it's not perfect, but it can give you a hint as to which way prices are likely to go. So when we see these turning points, this is one thing I usually look at. Right here, there was a turning point where prices stopped moving down and started moving up. Well, we'll go ahead and look at that now and see, was there a warning sign? Well, again, notice the bottom tails are getting bigger. That's the buying pressure coming in before it turns. Still, last-ditch effort trying to get a lot of selling pressure. There wasn't as much buying pressure as there was before. So we are making that move, trying to get lower. And now we see, it was met by a lot of buying pressure right here. And our selling pressure is waning. We had that large one, now we have very little selling pressure. This may be the bottom of the move. Well, we already know it is, but now we can see with the candles, it was trying to tell us that before it turned. And price often does that. And again, buying pressure, a little bit of selling pressure here. So we might pull back a little bit, and there we did. We pulled back and made a low and then pushed higher. And we're having struggles getting higher. Not surprising. We're coming into this little bit of selling pressure here and pushing down. So we might get sideways movement for a little bit. There's that sideways movement I was talking about. Couldn't quite break out because, again, topping tails and selling pressure. Well, you take a look here and you can see there's basing and drop supply right there. So we're kind of hanging out that supply zone. But now as we pulled back, there's a bit more buying pressure than there is selling. Now a lot more buying pressure. We're actually going to make a run through this area. And there it goes. So that is, a little bit on the shape. So you're basically looking at where did you close in relationship to the high and the low. Now when it comes to size, there's actually two different types of candles I look for. Typically one is called NRC, or narrow ranged candle. Okay, it's basically a small ranged candle compared to the ones around it, and it shows weakness. In the momentum. Now that could just be a pause or it could be a reversal. Depending on location. Okay, so that's a narrow range candle, and I'll get to the other one in a moment when I finish that. So when we start looking at these candles, let's try something else. We'll go into a stock, Qualcomm. Okay, right there, some narrow range candles. Okay, we're moving in a bit of a downtrend right here, and you see 1, 2, 3 candles. These are all smaller ranged candles. It's not just the bodies I'm talking about the wicks too. They're not really that narrow, to be honest with you. That's a little better. But, you even had some right here. It was just a pause before prices moved down. But often, it can show indecision and lack of commitment to the move as well. And right there, well, just kind of led us into sideways movement. Could be as subtle as something like this, too. Notice, as we're moving down again, there's a narrow range candle, another candle that's somewhat narrow, and that was the end of the downward move. So it's just a lack of commitment in the trend, and it could lead to a pause or a turn in the trend as well. Let me just fix this. There we go. See if I get some more up here. Those are the ones we looked at earlier. You won't always see them at turning points, but you often do. These weren't great. This one was a little bit better right here. Again, we're moving in an overall downtrend, although it wasn't the best of trends. And here you see how narrow that range is compared to the previous candles. That one's a lot smaller. It kind of stands out. That's a lack of commitment to the trend. Even the one after wasn't great. And sure enough, that was the end of the move. Normally, one is not enough to change direction. So there's a narrow range candle in the uptrend. It's just a pause. that's not a big deal. But if you happen to see multiple narrow range candles in an area, that could be a warning sign that price is getting ready to change direction. I'm just trying to see if I have a good example again. Like I said, I'm just looking at random charts. I didn't pre-pick anything. I'm just trying to see in the real markets where the things happen. So here we were moving up, and we had this one candle that kind of has a narrow range. Actually, I want to do a different tool. There we go. So that one is one, and right here's one that we're forming now. Right? Narrow range compared to the other ones around it. Could be the end of this little uptrend, especially if we have more than one. Well, it didn't. It continued on. It was just a pause. So we ignore it. But if we're moving in a trend and we get a bunch of those together, look out. And I don't have an example on this one. Okay. Let's see. If I go back in time, just trying to find these. It's not always easy to find examples of things you're talking about. I mean, yes, if they happen quite often. But this one is not something I follow all that common. It does happen, but just not as much as I'd like to see at times. Here, let's do this. Go back to home on a different page. Make it a little bit easier for me to find securities to trade. And we'll just go to a heat map, perhaps. Stock heat map. There we go. Yeah, Amazon. Or Microsoft. Doesn't matter, either one. And again, when we're looking at price action, movements, you want to see, for a strong trend, lots of movement. Here you can see we're in trouble with the trend because the colors are getting mixed. Not only are the colors getting mixed, but again, we're starting to see these narrow range candles popping up. And right here's another one. And even the top, we've got that topping tail talking about shape, right? So now I'm combining all of this. We got color, shape, and size, all telling us that, hey, there's some selling pressure coming in where there's a lack of commitment to the uptrend. This may be a reversal coming in. So there's a couple of narrow range candles all together. We're really not committed to this uptrend anymore. And next thing you know, prices start turning down. So it's just a warning. That's it. But combined with everything else, that was a pretty good warning sign, wasn't it? Pretty timely. Because prices dropped from 350 to 320, 30 points to the downside, all because we started seeing lack of commitment to the uptrend right there with the narrow range candles, and then the colors got mixed, and topping tail, that's a lot of selling pressure. There's almost no buying pressure at all there. So prices turn. Heck, we can take this down to a 5-minute time frame probably and see a lot of the same things. You know, again, sometimes when you get the narrow range candles, could just be a pause. In this case, they weren't really narrow range, let's be honest. Find better examples. Here we go. Prices right now are moving up with some pretty significant bullish candles. And then, there's a narrow range candle. So we're still trying to get bullish pressure here, but there's some indecision going on with the topping tails as well. And the colors getting mixed again. But right there, that's my concern. We got a narrow range candle after we're moving up. That's like, again, if I toss my pen in the air, it goes up, but momentum dies off. The inertia and gravity are equal at one point, and this pen stops. Then gravity takes over from the inertia, and prices come back down, or my pen comes back down. There it goes. Now we got a lot of inertia. No, actually, that's a lot of gravity pulling and creating inertia to the downside there. A little science for us. Oh, look at that. Bottom tail, possibly getting ready to pause. Nope, wasn't yet. Now it is. Anyway, so that is one thing I look at is the narrow range candle. The one I spend more time looking at, though, is actually the ERC. I follow that a lot closer, and that's the expanded range candle. Okay, or ERC. And basically, here, location is key. I'm looking for a range, and not just the body again, because the range can be at 2, the big wicks. Okay, so what I'm looking for is a big range on a candle, and if the ERC is in the same direction as the trend, those are novices chasing. Okay, it's basically the end of the trend. when you see that happening. However, if the ERC is starting a new trend, it is the professionals kicking off the trend. And it can be a zone in the future. There you go. So it depends on where the ERC is. Let's go back and I'll go to Amazon. Yeah, it doesn't really matter the security or whatever, but what I'm looking for is if we get a large candle in the same direction as we're already moving. This is probably not the best example. I mean, you can see that overall the movement is up, right? And right there we got, well, that one's kind of big, that one's kind of big. So now I'm going to ignore that. It can be very simple at times. Seeing a few examples here and there. There we go. This is a good one too. I'll get to the other ones in the future, but here we are moving up. Okay, first of all, back here, yeah, a little bit of a bigger candle than the ones around it, and that happened after a sideways move, right? So that may be pros trying to buy. Well, guess what? We got another example of it right here, didn't we? Here's another green candle that's larger than the ones around it, much larger. So twice we've had an instance of professionals trying to buy this stock, Amazon, at this price level. Well, that may be a good buying area. So prices start moving up. Look at that. And now we're in an uptrend. Now this is a pretty large range already. So is this one. And it didn't really warn us of change. Oh, that's kind of different. Okay. So this is a large candle. It's in the same direction we're already moving. So you see, we get that large buying pressure. And one of the things that usually hints that it's a novice is that you also break out of prior highs. It didn't break out of any other highs back there, but broke out of this high. That's very common for a lot of novices to try to chase and buy breakouts. So a lot of books have been written about, you know, buying the breakouts. Most of these breakouts tend to fail. So you see a lot of novices and the novice candles, for instance, chasing the breakouts. So there we get that big breakout, and honestly, you'll probably even see volume with it. If I go look at volume as an indicator, look at that. On that breakout, notice how the volume increased compared to the candles around it. Okay, that's another sign that this is what's happening. You know, this one, whenever you see large volume on a move, that's not necessarily a good thing because you use up all the buying pressure, all the selling pressure. You can see on that first candle, we just barely broke above this prior high with that large candle, and sure enough, we pulled back to shake everybody out. That's usually what happens with these novices. There, we moved up, we didn't have the huge volume. So we pulled back, we didn't shake everybody out. This one, again, we broke out. So for the most part for me, novice candles are large ranged candles, okay, in the trend direction. Often breaking out to a new high or low, and it's accompanied by high volume. People chasing price, and they usually catch it right when it turns. So when you see that, that's your warning sign. It may be time to exit, especially if you're at supply. And look at that, prices came all the way back down and started turning in the opposite direction. Even here, we're getting another possible example of a novice candle. We're already moving in a downward trend. We have a large range candle in the same direction we were already moving. We're breaking out of a prior low, and there's a bit of an increase in the volume as well. So this is likely to get retraced. Let's see if we get that pullback. There it goes. Now it didn't pull back and reverse, it just pulled back a bit. So be aware of that though when it can happen. Let me change gears here a little bit. I'm going to go to stocks. Actually, we'll do TCS, India, just to prove that this happens anywhere. It doesn't just happen in the US, okay? So let's go back to a random date and time. Doesn't matter. I'm on a 5-minute chart. Actually, let's go to a 15. There we go. And again, random. All this stuff occurs on pretty much any time frame in any security. Really doesn't matter. So I'm refreshing. Oh, it went all the way back. Whatever. Doesn't matter. Now we zoom back in. Okay, so you notice as we're moving down on TCS, at the end of the move, look who was there, our novices again. Large range candle. Look how big that range is on this candle compared to all the other candles preceding it. That really stands out. That's what you want to see. There was also a jump in volume. Okay, notice the volume was bigger than all the candles before it, except for back here. And was it a breakout of prior lows? Yeah, right there. We broke out of these prior lows with that candle. So all that combined tells you if you see something like this where, let's say you're already short and you're making money, you're doing nicely, and all of a sudden you get this really big jump in profits, you might want to take those profits because it could be the end of the move. And sure enough, there it was. So here we are moving to the upside. Oh, there's those narrow range candles, indecision. Okay, we're pausing in the trend. I would immediately look to see if we're at supply. If we're at supply, I'd expect this to turn around. If we're not, it's going to continue. And we did turn around a bit. So let's see if we can find another example of a novice candle. That one was just big. It showed up right away. And here we are moving up again. Let's see. Did we break out? We broke out a while ago, although it looks as though we're breaking out right now. Out of that high. Notice the spike in volume right there too. That's not really standing out though compared to the previous candles, so I would definitely keep an eye on this if it pulls back, but I wouldn't really be panicking on this one. You really want to see a candle that just kind of stands out size-wise compared to the others. So yeah, we did get a pullback on that one. And the volume was definitely a key thing. Usually those spikes in volume are what we call a capitulation, where prices end up turning because you ran out of all the buying pressure or all the selling pressure. Used it all up. So I guess that ended up working. I don't know what's coming up next. I'm just looking at the candles as you are. So here we are again. Now we gapped up and we had a big candle in the same direction we were already moving. Again, I could look back for a spike or a breakout if I want to. But the fact that we had this huge volume spike as well, that's a warning red flag right there. That's telling me we're probably going to pull back here. And look at that, we did all the way to the beginning of the candle. I actually have a trading strategy that I talk about in my e-mini think tank about how to take advantage of these opportunities as well. But once you know what to look for, it becomes more obvious. Oh, here might be another problem. We just broke out of this prior low right here. Now this one doesn't stand out, but it is a larger range candle. Although it's not much bigger than the previous reds, but it is after a series with the spike in volume. You should expect a bit of a pullback, not necessarily reversal of the trend. There's the pullback. And in fact, it actually did reverse the trend. Like I said, that big volume spike is a real problem. So you can keep an eye on that. So let's see what else we have here. Any more? Just kind of checking to see. I don't want to go too fast. Here we go, moving down in the trend. So we're picking up. We're near the beginning of the trend, so I'm not worried about this. Those are the pros. But yet again, another large candle after the first one with that spike in volume. We've got a problem. This could be the end of the downward move as we've exhausted all the selling pressure as the novices are chasing price. There it goes. Look at that. It went all the way back to the beginning of the candle again. And it was the end of the trend. See? Pretty effective. So keep an eye out for that. Let's see if we get any more. This was a minor one right here. You can see we came up, and a little bit bigger than the previous candles in the cycle, or the sequence. A little bit more volume, and end of the move. Okay, so then once again, we've got two large candles. The second one was the one that broke to the fresh low, right there. with a big range. Again, the body doesn't matter. It's the range of the candle between the high and the low. That's really large. And of course, big spike in volume. We could be getting a reversal now. Whoops, let's see. Look at that. It's happened again. So as you can see, learning to do this can be very beneficial. Color, shape, size, and location. By combining how to read price action, I don't really need to know, all the patterns of candles, harami and Tatsuki gaps and engulfing and all that stuff. It doesn't matter. What matters is color, shape, size, and location. Yeah, if you want to wrap them up into neat little packages and call them a candlestick formation, that's fine too. But at least looking at the shape will give you the same information. You don't have to memorize things. So just keep it simple as much as possible. Well, I hope you enjoyed the video. If you did, please hit like and let me know. I appreciate it. And also, don't forget to subscribe to the channel as well to let us know that you enjoyed it, and also that you can follow us again, and we'll put out new videos. I'm on a roll here, so I'm going to be putting out some new videos for you to watch. Again, just trying to help you on your trading journey. So until next time, trade safe, trade well, everyone. Take care.